US markets fall sharply following the UK's vote to leave the European Union, as the decision to leave sparks the biggest global financial shock since the 2008 crisis. Plus, stock markets in Europe also plunge. The pound sterling drops to levels not seen since 1985. Thanks for being with us. I'm Alice Baxter. Now, financial concern focused primarily on the impact that leave vote has had on global equity markets and currencies. Well, on Wall Street, markets opened a couple of hours ago now, and following the general trend, they sank, with the Dow Jones Industrial Average dropping some 500 points at the open. It's recovered slightly, but pound sterling, that's really been at the sharp end of markets' reaction, suffering its biggest one-day drop in 30 years before recovering somewhat, but it's still down against the dollar as well as the euro. Meanwhile, across Europe, if I bring you up those numbers, it's also a sea of red on the equities. Heavy losses on markets here in Europe. At the open, the FTSE 100, that fell some 500 points as well, down over 8%. It has since recovered, currently down some 2.47%. But over in Frankfurt and Paris, that's interesting, isn't it? All day, stocks have been even further in the red than in the UK. Investors clearly nervous about the impact of this UK decision on their own economies, and that fall in stocks wiping around $726 billion from the value of Europe's listed shares. Well, just in the last hour, we've heard from the head of the International Monetary Fund. Just take a listen to what Christine Lagarde had to say.
Be some time until we know the nature of the future relationship between the United Kingdom and the European Union. In the meantime, it will be important that there be clarity on the negotiation process and that it be carried in as smooth a manner as possible. I welcome the measures announced today by the Bank of England and the European Central Bank to support the banking system as needed and to guard against excess volatility and to provide what is necessary.
So Christine Lagarde calling for clarity on the process, because of course what all markets dislike is uncertainty. Let's get reaction now from Michelle Fleury, who's live for us in New York. That's what Christine Lagarde's been saying, Michelle. Have we heard yet from the US Federal Reserve?
We have. They said they are monitoring the situation closely. They stand ready to provide dollar liquidity if needed. If you think about the financial markets, very much like an engine that needs to keep the wheels well oiled. That is really the central concern amongst certainly US central banks around the world right now. Christine Lagarde has talked and praised the Bank of England and the ECB for standing ready to act on this issue of liquidity. The US Federal Reserve also trying to say they too stand ready to provide what assistance they can to keep the markets moving. We've seen how sharply, Alice, they have reacted. Of course, as you mentioned, investors don't tend to like shocks, don't tend to like surprises. If you look at the VIX index, which is seen often, or it's often called a measure of fear, that index right now is up some 20+%, an indication really of how investors feel about this decision right now, a shock reaction, and that's why you're seeing the major markets here all moving downwards.
Yeah, a sea of red across all the equity boards. Michelle, good to check in with you. Michelle Fleury there for us live in New York. Let's get reaction on the other side of the pond now. Ben Thompson is on the Schroders trading floor for us in the city of London. Ben, we saw that very sharp sell-off on the FTSE 100 at the open. It then pared back slightly following those words of calm from Mark Carney. What's the situation now?
Yeah, Alice, it's interesting, and I want to pick up on that thought you had about the continental European markets faring much worse. Let me show you the numbers, because European trade now at an end, but the FTSE 100 down 2.75%. But you look there, in Paris down more than 8%, and in Frankfurt nearly 7% lower. Big questions about why there is a difference, what impact all of this means for them. But then, as you heard there from Michelle, trade now, of course, well underway in the US, 2.5% lower. So there was some reassurance. We heard from Mark Carney earlier, ready to step in if needed to help the financial system. That helped to win some confidence back in the city, but there is really now a feeling that they will just step back, see what happens over the weekend and reassess this in the cold, harsh light, perhaps, of Monday morning. So What will businesses be thinking? What will investors be thinking? Andy Brough is with me. He's from Schroders. Andy, we look at these numbers. Yeah. It tells us, it gives us a snapshot of what investors think. Just talk me through the day. How would you describe today?
Well, you know, waking up and sort of turning on my phone and suddenly realising actually we're out. And the dollar, I think, when I left home, was sort of trading at 130, having fallen from 150, you know, biggest fall ever probably. And the FTSE 100, a lot of its earnings are dollar denominated. So 60, 70% of the earnings of this particular index come from overseas and are denominated in dollars. So sterling weakening against the dollar means that the earnings of these companies are going to be higher. And that's really why the FTSE is only down 2.7%. Because if you were looking, if you landed from Mars, you'd be thinking it was Europe who voted to leave us rather than the other way around. And people are now worried that actually the UK leaving, we weren't part of the club. Now there's going to be a lot of pressure. If you had a referendum in Europe now and one of the people that's tied into the euro leaves, now that really is problematic. This 8% fall is kind of mirrored in UK stocks. Outside the 100, we have the FTSE 250, which is very domestically biased. It's got house builders, champs, companies, etc. And that's down about 7-8% because obviously people are thinking, right, no one's going to be buying a house, buying a car, and it's in that sort of uncertainty period. And I think over the weekend, as you touched on, people are going to be looking at that and thinking, actually, what does this mean for us?
OK, Andy, really good to talk to you. Thanks very much, Andy Brough there from Schroders. So, as we said, it will be Monday perhaps when we get an indication about what could start to happen next. I suppose markets don't like the uncertainty. They've had an uncertain referendum campaign. Today we get a bit of certainty. The UK has voted to leave. But of course Monday is when the real work begins and the uncertainty perhaps is just beginning.
Yeah, Ben, many thanks to you and your guest. Really interesting to get that explanation, explaining the disparity between the slumps we've seen here in London and in Paris and in Frankfurt. Well, Tanya Beckett is in Frankfurt for us, of course, the home of the European Central Bank and the financial sector of Germany, a hugely important trading partner to the UK. What's the reaction where you are, Tanya?
Well, I think initially when Germans woke up, they were really quite stunned. It wasn't an outcome they'd been expecting or in many cases really discussed apart from the last couple of weeks in some of the newspapers. Behind me you can see Frankfurt's financial district. That's mushroomed. 10 years ago, more than 10 years ago actually, I was living here and it wasn't anything like that size. Now we've seen banks really develop their bases here, partly because of the European Central Bank. And there is speculation, of course, that German banks would be much more tempted to move some of their staff, relocate them back to Frankfurt. And at the end of the day, I think Frankfurt, having emerged from its gloom, it's very sad at the prospect of Britain leaving the EU. It will seek opportunity. There's already discussion about euro-denominated trades and the fact that there is unhappiness about them being cleared in London outside the Eurozone. There would certainly be a lot of disquiet about them being cleared outside the European Union, a very strong possibility that that function could come back to Frankfurt. But that's just one of a couple. And as I say, Frankfurt has become a much more attractive place to live and Germans would like to capitalise upon that.
Yeah, indeed. Already this morning we've had Morgan Stanley having to deny that it's beginning a process of relocating thousands of staff from London to either Dublin or Frankfurt. Perhaps many more such stories to come. Tanya, good to talk to you. Tanya Beckett there for us in Frankfurt. There you go, market reaction from right around the globe. Do stay with us here on BBC World News as we continue to monitor events from all of those major financial sectors. But for now, from me and the team, thanks for watching.